Ladies and gentlemen, welcome back to another trade review. 40% banger. 40% banger. Before I even get this started, let me just... Can you hear that? Boom. Bucked up. Bucked up. Let's work. No product placement. Anyways, breakdown for the trade today. 40% banger. IWM. Nasty! It's absolutely smacked. Sorry. My dog is going to start freaking out because I started yelling. So my apologies. My apologies. But with that being said, we had a fire banger today on IWM. Okay? Let me explain the exact trade, break it down for you step by step. That way you can take it as well if you want to. So we're going to start here on IWM on the hourly time frame. Forgive my TOS because this thing has been absolutely freaking slow. It's been kind of laggy. I'm honestly surprised I even took a trade on it today because it's been lagging so hardcore. You can see my mouse is like barely even catching up with the cursor. But overall, we had a downtrend day. We had a push up in the morning, a reject in what would you call this, the afternoon or at 10 a.m. we had a reversal essentially on IWM and we started pushing down. So going into the day, I have my areas of liquidity marked out. So 222.65 right here. You can see we had multiple equal highs. 1, 2 equal highs right in here. So I'm just going to go ahead and erase this now. But that was my level. That was a level this morning that I was looking to take a trade off of. I was either looking for a break above and a retest for a continuation of that level because equal highs, we could have a decent amount of liquidity towards the upside, or I was looking for a reversal at that level. We ended up basically chopping around that level. I think we pushed through it, but we ultimately chopped around that level. I'm going to remove that now. Next area I had was this 1 hour fair value gap right here. McNasty fair value gap. So I drew out this fair value gap, and one thing that I've been paying attention to more often than not has been the 50% retracement. 50% retracement Fibonacci, right, of these fair value gaps on the higher time frames, being hourly, 4 hour, whatever. And these levels, these levels hit to a T. Look at this level. It smacked. Nasty work, okay? It hit to a T, and it started rejecting. So I had this giant fair value gap drawn out, and naturally I'm looking for the 50% retracement. I did not have 50% marked out because the fair value gap isn't that big of a gap, so I kind of can see where half of that fair value gap or the 50% would be. So I didn't have that exactly drawn out, but let's zoom in now on the 2-minute time frame, which is typically what I take my trades off of, the 2-minute time frame here. So price reached up into there. If my TOS will work, price reached up into there perfectly, and we ended up getting a reject out of that area. So naturally we get the reject. I'm like, okay, this level is valid. We're getting a reject. Now let's see if market structure builds upon itself. And what I'm looking for there are reversals such as break of structure to the downside, order blocks, bearish order blocks being respected, bearish fair value gaps being respected. Basically those three things. Okay. So as you can see on the 2-minute time frame, we had a leg up of 1, 2, 3, 4, 5, 6 green candles in a row. So we have a massive area for us to get back through before we can even technically break structure back to the downside. So we come up, we reject out of it, and I can't take a trade here. I can't take a trade in this area. And like, you know why, if you know what I'm looking for, and it's because we haven't broke all this structure, right, from all these candles all the way to the downside. We just haven't broke them yet, right? So we get a lower high. Okay, that looks a little bit encouraging. We get a continuous push down. Now, if you wanted to be risky and you wanted to get a little bit of a better entry, this is where you could have entered, okay? We created this higher, it's a higher low, but then we created a lower high right here. This lower high combined with the respect of this 2-minute fair value gap could have, if I can use my TOS, combined with the respect of this 2-minute fair value gap, Oh, if I could draw it. This thing is so laggy. Combined with the respect of this 2-minute fair value gap being respected, you could have taken a trade off there, set stops above this high right here, and targeted this low, and this low. I had further lows drawn out from the hourly time frame, but if you wanted to take a trade intraday, could have targeted those 3 lows. Okay, I did not see that, and quite frankly, I did not want to take that trade, even if I probably saw it, because we got whipsawed so much around here that I'm not exactly sure where price is going. On top of that, we haven't broke structure to the downside, meaning we haven't had a close candle below here, right, until all the way over here. So we hadn't done it yet. But if you did want to enter there, you could have entered in this fair value gap, stops above this high with continuation, targeting this low, and this low. That's not the trade I took, but just an idea for you guys if you guys wanted to take a trade. And I'm just breaking down more market structure. That way you guys can understand. But with that being said, price continued down, and we finally closed below, I think it was on this candle or maybe this candle. We closed below this huge rip up right here. So now is when I'm looking for a move to the downside. So one thing happens that leads to another. We have another 2-minute fair value gap right in here. Wait for it. And keep in mind, on the way down, I'm basically just drawing out bearish confluences and waiting to see if price respects those confluences or not. So we have a bearish fair value gap right here. Let me zoom in a little bit more so you guys can see. But we have this bearish fair value gap right in here. Price comes up into that fair value gap in combination, I say this every time, in combination with the 9, 20, and 45 EMAs in an overall downtrend. Okay, what does that tell us? That tells us that price is respecting, rejects this bearish fair value gap. What does that say? Price is respecting bearish price action, right? Or bearish market structure. It's respecting it. So what does it want to do if it's respecting bearish price action? It wants to take the most recent area of liquidity. Okay, it wants to take a large area of liquidity. It could want to take an intraday area of liquidity, but we're shooting for the stars here in the moon. So essentially, we get a reject out of here. We get a closed candle down. I didn't mark out my entries on this. I just took the trade because I did add to this trade, and I'll explain that later on. But as soon as we get the closed candle out of this, I take my entry towards the downside. I set the stops above the recent high that we literally just put in, just because this candle was so massive. So we end up taking this trade to the downside, right? We're in the trade, and I have my areas of liquidity marked out. I will now go down to the 5-minute time frame to explain those. Exactly what I'm looking for. So 5-minute time frame, we have intraday levels, and then I'll tell you my overall levels. So intraday levels, 5-minute time frame, I'm looking for push down, push up, this low right here. Oh, my bad, this low right here. Obviously this low, but we were kind of already at that. And then push down, push up, this low right here. So it bounces right off of this low perfectly. And when it bounces off of this, I'm up a decent percentage, right? I think I was up 25% at this point. Nothing super crazy, but it's pretty solid. So I could have easily taken the trade there, but I wanted to see if price was going to go down and take my hourly areas of liquidity out. So we're going to pop over to the hourly time frame. Or we don't need to pop over to the hourly time frame actually, because I can just show you on the 5-minute. So 5-minute time frame, these were hourly candles, hourly lows marked out. So hourly low here, hourly low here. 2 areas of liquidity, right? You can see what price is doing right now. It's bouncing right off of my lower level of liquidity. And where did I sell? Right down there. Right down there. Anyways, back to the trade. So those are my 2 areas of liquidity right there, marked out. If this would stop trying to make me edit something. Those are my 2 areas of liquidity I was aiming for towards the downside on a larger time frame. I had the intraday levels on the 5-minute marked out, just like I explained. We'll go back into the 2-minute. My bad. We'll go back into the 5-minute time frame actually. Into the 5-minute time frame, price bounced off of the last intraday level of liquidity being right here. when we bounced off of this, like I said, I was up around 25% and I could have taken profits. I did not take profits. I waited to see if price was going to respect bearish structure. This was a choice I made depending or based on me wanting to make more on this trade and me feeling more confident that we were going down to hit this level here and this level here, right? Price bounced here. We had a 5-minute order block to the downside. So continuation order block right here indicated by this blue horizontal line. We rejected off of that in combination with the 9, 20, 45 EMAs. Okay. We rejected off of that and continue. Yes, it was choppy, but we continued all the way down to this level, 220.74. We bounced up again and rejected off of the 9 EMA. And then we continued down perfectly to a T of my level at 220.21. And now price is reversing. That was the entire trade. From breaking it down, I'll just give you a quick summary. That way, you guys, if you're made it to this point in the video, give you a quick summary because I've broken down on every single time frame. This is the summary of exactly what the trade was. Higher time frame, 1 hour confluence. Okay? 1 hour fair value gap, 50% retracement of that 1 hour fair value gap. We waited for the reject, and then we zoomed in on the 2-minute time frame, and we waited for break of structure towards the downside and a retracement into a bearish fair value gap after we already saw price was respecting bearish price action. Enter the trade, take profits based on hourly levels of liquidity and intraday levels of liquidity. And the rest is history. Like, that's literally it. So hopefully this makes sense to you guys. Hopefully this whole trade made sense and I broke it down properly for you. But overall, that was my trade. And as you can see, these levels mean something because look what price is doing as soon as it hit my level. Don't even pay attention to the buy signal. The buy signal doesn't even matter. What matters is that price reacted off of it, okay? You don't even need the buy signal. I already drew out the level. I knew it was going to bounce here. And if it wasn't going to bounce here, then it was going to have some trouble and then it was going to break through and go down to another level, okay? But you have to be able to read the price action, aka watching to see if price respects bearish or bullish price action with fair value gaps, order blocks, all this other nonsense, okay? As long as you understand that and you can read price like a book, you can make any trade, and you'll understand very quickly that not every trade is even worth it. And the trade that I took yesterday, so the previous video from this, I failed to mark out an area of confluence, aka a level of like this. I failed to mark out a level like this. And I didn't know that that level was prominent. And I was sitting in a trade, and I ended up losing 20% because I didn't mark out that level. Now, if I would have marked out that level and then tracked price action based on knowing that that level was there, then I would have been way better off than I was yesterday, not knowing that that level was there, just sitting and waiting for price action to chop back and forth. But overall, as long as you could read price action like a book every single day and understand, you don't need to know where price is going. You just need to have a good indication of where price is going and then let it show you that it's respecting confluences, and then you have a valid entry. It's like that simple. And then just take less trades because there's only so many trades that you can take, right? This was a good area of interest. This was a good area of interest. This low, I didn't mark it out, but this was a good area of interest, right? We came to a T. We took it by 1 penny. The low on this was 221.01. And the low right here was 221.02. We took this low over here by 1 penny and then started pushing back to the upside. Now, we respected bearish market structure and continued to the downside, but overall, we respected this, right? Pushed back up and then got the continuation. So mark out your levels, read price action like a book, and you won't have a problem. And take less trades. But hopefully you guys enjoyed today's video. Hopefully you guys learned something from this and can apply it to your own trading. And if you have not already, hit the subscribe button down below. Check out the links in the bio down below too. I got my Instagram down there, and a Discord. So the Billionaires Club. for trade recaps and stuff like this. So feel free to sign up, and we'll be making money together. So thank you guys for watching today's video. If you have not already, hit that subscribe button down below, and I'll see you guys in the next video.